That's right, Ayo. Inflation is a top topic at this time. Good morning, everyone, and welcome to Business Morning on Sunrise Daily. We'll talk about that inflation pressure that we see subsiding in the country. Should be good news, but we'll see if it's really good news. Let's start from the global space, as we'll normally do. Oil prices rose nearly 1% on Wednesday from a two-month low in the prior session as the market balanced bullish U.S. economic and crude storage data against the International Energy Agency's forecast for weaker global oil demand growth. Yes, inflation numbers were out yesterday, both for Nigeria and the United States. We'll see how that impacts other things. But let's look at the Brent oil price. It's up 0.5%, $82.75 a barrel. WTI of the United States, $78.63 a barrel, and that's up 0.8%. The drivers this morning obviously has a lot to do with data inflation numbers, not Nigeria's inflation numbers in this time. But we see that yesterday's inflation from the United States it tapered and prices reversed direction after that data showed a bigger than expected crude. This is for the crude drawdown and lukewarm inflation. That's it. That's what drove the market mostly yesterday. That inflation number, that expectations of a cut later on this year brings it a bit closer. Analysts are expecting it to start by September. We'll see that U.S. consumer prices increase less than expected, and that suggests that inflation resumed its downward trend for that country. So, of course, what that means is if interest rate cuts begins, there's likely to be increase in demand for crude oil because of increase in economic activities, and that will translate to obviously higher prices for the crude. So U.S. inflation number was a major driver yesterday of crude prices, and of course we also had Nigeria, so we'll discuss that in a bit. First, let's look at the Naira close yesterday, still a red one for that market, the currency market in Nigeria. NAFEM, we see actually gained on NAFEM yesterday, gained about 4%, because it opened at 1,520 and closed at 1,459. That's a bit of a good news, yes. I think I missed that somewhere. But good news, we hope it's sustained. Also the same thing for NAFEX. We see that there was a gain from 1,472 to 1,541. No, this was a drop, 1,441 Naira, 90 kobo for NAFEX, again right there. For NAFEM, but a depreciation on NAFEX this morning. Nice one for there. Well, there we have it. Yesterday, but we're still doing around 1,500 when you look at the parallel markets and what's going on right there. Still a willing buyer, willing seller. And yesterday was obviously inflation numbers day, so we saw a lot of reactions. One of them came from the CPPE, where they're reacting, and that's a Center for Promotion of Private Enterprises. We know that the director, the chief executive director there, Dr. Muda Yusuf, is always, most of the time in our studio, believes that the persistent inflation in Nigeria remains a major concern, obviously affecting purchasing power, and says it's a positive development as headline inflation rates decline month-on-month basis. We've seen the pressures reducing, and perhaps this is a signal that we have hit our peak and maybe we are beginning to reduce. Also, the start of domestic petroleum refining by Dangote is expected to reduce energy costs. Energy cost is a major factor driving inflation in this country, as well as food inflation. That's number one. And then, of course, we have energy costs. Then CPPE recommends that the CBN monetary policy, we know there's a meeting on Monday and Tuesday, decision is supposed to be announced on Tuesday, that they should pause the tightening to help businesses recover while fiscal policies tackle supply-side inflation factors. But the CBN governor has already warned us before now in one of the meetings he's had, that was last week, to say, well, the CBN is still on the hawkish path. Tightening is the rule of the game, or the name of the game at this time, from the MPC of the CBN. And then we see what IMF is doing. The African Development Bank and the Inter-American Development Bank welcome the International Monetary Fund's Executive Board's decision approving the use of special drawing rights, SDR, for hybrid capital instruments. This approval allows countries to channel SDRs through multilateral development banks, implying that AFDB, IDB financial instruments could leverage SDRs by up to 4 times their value in the form of loans to finance social and climate projects. This innovative SDR-based hybrid capital channeling solution will help unlock new lending by multilateral development banks to address rising global challenges, including climate and food security. The new instrument offers the opportunity to lend at least $4 million for every $4 for every $1 equivalent of SDR through the African Development Bank and the Inter-American Development Bank, as well as other multilateral development banks to finance development projects. So obviously here it's to get more countries involved in the issue of climate change and development of projects that are climate related. Back here in Lagos, the Nigeria Employers Consultative Association, NECA, has created a forum for young job seekers to meet with potential employers in Lagos. The Job and Employability Fair 2024 exposed the youths to what employers look out for in curriculum vitae, composure and comportment during interviews. They were also given minutes of interaction with representatives of potential employers. From the interaction, employers will choose candidates for proper interviews, which is supposed to hold in 2 weeks' time.
What we do is to ensure that businesses in Nigeria continue to be sustainable. And when they are, we create an environment that is conducive for every one of us. Now, the program we're holding today is to connect the tomorrow of Nigeria to the opportunities that abound, such that it's not all about I have gone to school. Many of them, what you have in this room today, there is no single one of them that will be able to access them beyond the kind of gathering we have put together. So what we have done is to bring all of these people together, all the employers together in a room, and give opportunity to these young ones to have access to them. Many of them have been sending their CVs to these organizations and nobody will attend to it. But on a day like this, you have those companies present all around here and you have access to them.
All right, so let's go back to that inflation number. We did see inflation yesterday for the month of April at a headline inflation at 33.69 from 33.2%. Month on month, we've seen a slow for the second consecutive month. We've seen the rate of increase even year on year reduce. So it is the beginning of good news. Has inflation peaked in the country? Well, let's talk to Senior Associate of Financial Derivatives Company, Dr. Adesola Sumoni. Dr. Sumoni, a second time this week. Good morning. Thank you for coming on the program.
Good morning, Ine. Thank you for having me on the show.
So can we say that inflation has peaked in the country? Dr. Sumoni, did you hear me? Can you hear me? Okay, seems there's a bit of network with that. Let's take a break. When we come back, we hope that Dr. Sumoni will be back with us. Just stay with us. Welcome back. Yes, I think Dr. Sumoni gave us time to take that break. I hope you can hear me now. Are you back? Yeah, great. So I was asking, now we notice that the inflation pressure is reducing a second month this time around. Can we say that inflation has peaked in Nigeria?
That's an interesting question. Let me start by saying, we expected inflation to increase by around 100 percentage points to 34.25%, but we saw even better inflation numbers. Inflation came in at 33.69%. And like you mentioned rightly, we are seeing a positive trend. We are seeing that the rate of increase or the pace of increase in inflation is declining. That is month-on-month inflation. It appears that on a monthly basis, inflation peaked in February. It appears so. We're going to have to wait some more time to be able to confirm that. But since February, we had month-on-month inflation was 3.12%, and then in March it reduced to 3.02%, and then in April it's reduced further to 2.29%, which kind of suggests that the inflation is losing steam. And if this trend persists, then we might see headline inflation peak around at the end of H2, and then we might begin to see inflation trend downwards.
But is this reflecting in the costs of goods? I think that's what Nigerians want to know.
Let me start by saying, first of all, that prices are sticky. So by sticky, I mean that, when prices increase, they do not decline as quickly as they increase, or they do not come back down as quickly as the economic conditions are changed, for many reasons which I'm not going to go into now. But we are going to begin to see prices decline once the reduction in headline inflation becomes persistent. Once we see a change in the curvature, once inflation peaks and begins to decline, then commodity prices would also decline. Mind you, we are currently in a planting season, which is notoriously associated with a scarcity of commodities. Now, if you look at the price of some domestic commodities, particularly those that are grown domestically, you are going to see that the price of most of them are trending upwards, signifying the seasonality in these agricultural commodities. But once the harvest comes in a few months, and once this trend in inflation persists, once the pace of increase in inflation begins to trend downwards, we are going to see the price of domestic commodities also trend downwards.
Yeah, I wonder how long we'll have to wait for that, because when it was going upwards, prices just followed upwards. But U.S. inflation also moderated yesterday. We saw the numbers. Well, I think the natural expectation from this is that interest rate cuts should start, perhaps by the September, which a lot of analysts have placed. But what is this doing to us? What is it doing, especially, of course, to the value of the dollar, and then it spill over to countries like Nigeria?
Let me start by saying, for the U.S. inflation, this is what we call the last mile. It was easier to bring inflation down from the 40-year high we had around 2 years ago, 9.1%, to closer to the long-term or long-run inflation target of 2%. But then now bringing this last mile, bringing it from 3% down to 2% has been a challenge. For the past couple of months, we've seen inflation increase and decrease. So we've not seen a persistent trend in U.S. inflation. We've seen it yo-yo between 3% and 4%, and you can argue that that is single-handedly the most important factor in driving the path of U.S. Fed interest rate. At the moment, I think what's happening is U.S. Fed officials are just waiting to see a persistent trend, downward trend in headline inflation before they begin to then cut benchmark interest rates. Now, in terms of the implications for us, at the moment, the interest rate numbers are going to be held higher for longer until we begin to see a sustainable downward trend in U.S. inflation. And once they begin to cut inflation towards Q3, as you rightly said, that is if inflation trends downwards consistently and they are happy with the pace of the pace and the outlook of inflation, then it has implications for countries like Nigeria, for example, in terms of foreign portfolio investment. So that Nigeria's what's the word now? Government papers, treasury bills, bonds will become more attractive to foreign investors. Also, given that Nigeria has significantly increased its own benchmark interest rates. So, for instance, the 365-day bill, treasury bill is around 21%, and almost 1 year OMO bill is around 17%. So with those attractive rates and the US cutting their interest rate, we might begin to see foreign portfolio investment coming. Also, it has implications for oil prices. The cuts in US interest rates might, stimulate economic activity, which would increase oil demand growth. Taking that in addition to OPEC's cuts or OPEC's production cuts, oil prices will increase, which is positive for Nigeria if we can increase our production as well.
Yeah, and if right there. Well, thank you so much, Dr. Adesola Asomani, for your time.
Thank you for having me.
Let's take a break. When we come back, recapitalization is still very much in current conversations. I will delve into that in just a moment. Do join us again. Welcome back. Still watching Business Morning on Sunrise Daily, and yes, we are discussing recapitalization, which is an ongoing one in the financial sector, especially the deposit banks in the country. Let's find out the perspective of investment bankers, see what they're expecting from this and how they're preparing for this. We have the Managing Director, United Capital Investment Banking, Dr. Gbadebo Adenrele. He joins us right here in the studio. Dr. Adenrele, thank you for your time. Good morning.
Good morning, Nini. Thank you. Thank you for having me here.
Good to have you. So, banks have submitted, or they're supposed, I haven't seen this, I'll just say, they're supposed to have submitted their plans for the recapitalization. They still have almost 2 years, beg your pardon, left. I don't know if perhaps you have seen it. You guys are very active in the financial sector, and your thoughts about their plans. We know obviously the capital market is going to be very busy, but perhaps you can help us to expose some of those opportunities that will be available to investors for this recapitalization.
Okay, thank you very much, Jenny. I think the CBN came out with the recapitalization guidelines, and banks are expected to raise their capital buffers. So a number of banks from regional banks will now need about 50 billion naira. National banks, banks with national licenses, 100 billion, 200 billion. And then banks with international licenses will need 500 billion. If you look at all the banks, what was required to come in would be about 4 trillion naira across the banks, the ones I've mentioned, as well as merchant banks and non-interest banks as well. That 4 trillion naira is going to come over a 2-year period, and it's about 22 months left now. And we think that that bodes well for investors across the buy side, as we say it. You get a sense to say that this is similar to what happened in 2004-2005 recapitalization period, where we had 89 banks, and those reduced to 25. They raised capital, they merged, and the capital requirement was raised from 2 billion to 25 billion then. Slightly different now because we have different tiers and different options are available for the banks. But essentially, these banks will be coming to the market to raise capital, both domestically and internationally, and there lies the opportunities for investors to increase their stakes in these banks and for new investors to come into the different banks as they come out to the market.
So there's also been conversation about how many banks will survive. Some have said about 11. So, of course, potential investors have to be careful of where they go into or which path they look into. What would you say would be the ingredients to look out for as an investor looking to, participate in this recapitalization?
So I think for the banks, there are about 7 banks with international licenses, another 21 or thereabouts with national licenses and regional licenses. What is key is that what's the value proposition of each of these banks, right? And what's the outlook for these banks? There's a view around what their historical performances have been. There's a lot of access to that. A lot of these banks are listed and their information is public. But there's also the view around the future of the market. Again, with 4 trillion expected to come in or thereabout to come in the financial services space, the space is going to get stronger. So you have more stability in the financial services space. This is going to trickle into a stronger economy, and banks will generally do well as they raise capital, they're able to intermediate more in the economy. So by and large, you find out that a lot of these banks will do well. Now, for investors, identifying which ones, now you generally say the bigger banks clearly stand a better chance in terms of scaling the requirements. But what you also see is that because there's a slight difference in what we have now, because you have tiers, you have options for the banks. Some of these banks can scale down their licenses from international to domestic, and from domestic to regional, where they're not able to meet those recapitalization requirements. On the other side, you have mergers and acquisitions. You have opportunities for banks of similar size to come together, to form larger banks that can compete more favorably, both on domestic and international level. We see a situation where you have almost all the banks scaling through, so there shouldn't be any worries for investors in terms of are there going to be banks that will fail and all of that. I think the confidence is there. There should be that confidence that a lot of these banks will make it. Either they raise capital, and where they can't meet that, they would combine, or sometimes they get investors both from new investors or acquirers, both from international and even domestic markets. Yeah,
because even in the case of mergers, investors are still safe.
Yes, in case of merger, so your investment in the bank still remains because you're still a shareholder in the combined entity at the end of the day. And just to give a sense around even this whole recapitalization exercise, the confidence level should be, there's no reason for investors to be worried. And I give you some example. I give you some metrics. Look at the credit to GDP ratio of Nigeria, right? It's about 14-15% right now. You compare that to the sub-Saharan African region, it's average of about 47%. Right? And you compare that to more developed markets like the UK and thereabout, where it's over 100%, you see that we still have a long way to go, and increasing the size and the strength of the financial services sector would only bode well for the economy. Also look at total assets, for example. Total asset to GDP ratio from a country perspective, total banking assets to GDP ratio is about 15-16% or thereabouts. And you compare that to other economies in Africa, Kenya is about 47%. Kenya itself is also recapitalizing. The Central Bank of Kenya just came out with new guidelines for the banks in Kenya. They're also doing something similar, and they are 47% already. South Africa, which is also a strong economy in the African region, is about 74%. Right? Remember, Nigeria is about 16. You look at Egypt. Egypt's total asset to banking is about 100%. So there is still a very long runway. The opportunities are there for the Nigerian financial services, and this recapitalization drive is only positive. Can only be positive, yes.
Yeah, and I'm sure as an investment banker, you are excited. A lot of windows are opening up for business.
Yes, indeed. Yes, indeed. I'll say that from the market perspective. So I'm actually the vice president of Association of Issuing Houses, and that's the umbrella body of the investment banks with issuing house license in Nigeria. And we are all, happy about this directive around bank recapitalization. A lot of work to be done. But you also see that even from the regulatory perspective, there's been a change at the leadership of the Securities and Exchange Commission, and that has they've already hit the ground running and with a lot of positives. But I also tell you that also from our end, from my end at United Capital, we are well positioned. We have firm and team experience in raising capital for companies across financial services, energy, consumer goods. More recently, if you recall, earlier in the year, we listed Transcorp Power at 1.8 trillion naira on the Nigerian exchange. That's about 2.8 trillion. But we have experience working with a lot of financial services companies in raising capital to support their growth aspirations. The same will play out for the banking recapitalization space. For the market in general, both the buy side and the sell side. Buy side being fund managers, stockbrokers, and those with funds will benefit from this. Like I said earlier, investors will be able to invest in the shares of these companies. And on the sell side, which is where the investment bankers come, will be able to work with the companies, with the banks, essentially, in selling their stories, selling their equities, selling these opportunities to investors in Nigeria and abroad, actually.
And we do hope the capital market is ready for the action that's about to hit it.
Yeah, indeed. The capital market is actually ready, and like I mentioned, both the buy side and sell side are fully ready. I give you an example of my firm. United Capital PLC has a balance sheet size of circa 1 trillion naira. We have a suite of services, the investment banking business, which I look after, but we have an asset management business, for example, which is the second largest in the country. And we also have a wealth management business. We have a stockbroking business, which is number one in terms of trading volume. We also have a foremost trustee business, business, we have a consumer finance business and a microfinance business licensed by the CBN. So for this group, for example, we're well positioned to be able to support banks in their recapitalization drive, and a number of other capital market operators are in a similar position where they are prepared and well positioned to be able to support markets, support the banking industry. More importantly, I think this recapitalization drive, it will catalyze the Nigerian financial services industry and the Nigerian economy at large.
All right, Dr. Gbadebo Adinrile, the Managing Director, United Capital Investment Banking. Thank you so much for your time.
Thank you very much.
All right. All right, just before we head back to the Sunrise Daily Studio, let's look at the numbers. Close of trade yesterday, beginning from the NGX, is still a negative 0.13%. In the red is what we had at the close of trade, losing about 74 billion naira and still holding on to 55 trillion naira, barely holding on to 55 trillion naira at the close of Thursday's trade. We look at the activity chart, we see a lot of greens, more green than red, but I mean, it's still profit-taking going on there. 335 million in volume, worth 7.14 billion naira. 7,353 deals is what happened. Top trades is mostly the banking sector, GTCO and Access Co. They led the trades yesterday. Tantalizer, one of those penny stocks, also caught the attention of investors, but you know, this can hardly make a lot of move in the market because of its market cap. Going to the unlisted market yesterday, there's a change there. We see a positive trade. It closed at 3.01%, and after 1,243 market cap at 1.7 trillion naira. Activity, right there you have it, 1.7 trillion naira. Activity chart for yesterday was mixed. Volume and value were in the red, not so much. Deals and the stocks traded were, however, in the green, a bit better than the other two at the close of trade. And then we can now go to that federal government bonds that we saw earlier. This is the Treasury. Treasury bills had 28 deals yesterday. I also know that there's also what the federal government has made from saving bonds. There's a new saving bonds out, so you might be interested in that if you want to look that way for your investments. After all, the fixed income market is where the money is at this time. So 28 deals valued at 34.58 trillion naira for the Treasury bills. For federal government bonds, there were 19 deals worth 10.85 billion. And also when we look at OMO, there were 29 deals worth 120.40. A lot of activities going on right there, stealing the shine from the stock market. But anyways, we can only have one win at a time. So that's much we can take. But 1 p.m. Business Incorporated will be here. I'll be here for the markets. Ladi will be here to give you other conversations. It will be 55 minutes, you know, very robust conversation is what we're promising you at 1 p.m. during Business Incorporated. Let's head back to the Sunrise Daily Studios.